Last time I saw you, we were in London together, so there's a lot of anticipation about these upcoming EU elections. I want to ask you, right now we're seeing European equities trade lower. Is that just a sell on the news event, or is this part of possibly a departure from the trend that we've seen earlier today with these markets rallying, or earlier this year, I should say?
Well, usually EU parliamentary elections don't move the markets at all, let alone interest them. But I think we have to look a little bit more closely at the data. I do think markets will digest the news. There has been a political earthquake for France, where Macron responded to the performance of the far right party, formerly led by Marine Le Pen, now led by a very charismatic 28-year-old, by calling snap elections from a position of weakness. So this is very unusual. And with that in mind, I do think the fallout is likely to be contained mainly to France. And we've seen it in French financials, although, of course, the euro has been hit. But I'd put back to you, is that because of the Fed data coming this week more than anything?
All right, so you're hitting on two things. Number one, that France, which is trading a lot lower than the others, may be a bit of an outlier because of those snap elections. And then second, the impact of central banks, whether it be the ECB or the Fed. Over there in Europe, we've seen bond yields rise. So I think that's kind of the other question here. How much of this, what we're seeing in the equity markets, at least today, is the rise in bond yields following that higher than expected jobs report in the U.S., and how much of it is anticipation about a change in policy if there's a big right-wing shift?
Well, we're never really able to separate out those variables, and that's the honest answer. I mean, with the ECB cutting well before the Fed, their fates are now a bit more intertwined than we're used to. We'll get more clarity, of course, about how much this is to do with France as we start to get new polling data heading into these legislative elections. Remember that Macron will stay in power as president. Legislative elections are held in 2 rounds, and that's what makes this different from the UK elections, for example. Here in London, the political elites have been clutching pearls and saying, why has Macron done this? It is a big move and a risky gamble. Sunak having done a similar thing. We're going to have elections July 4th and
Right.
July 7th.
And both from a position of weakness, Tina, which is generally in politics.
Yes.
Yeah, generally what you don't want to do. So before I let you go, I want to get a bit granular. I want to come back to equities for a second. I often talk, I said this earlier in the show, we often talk about Europe as a monolith, but it's different countries, different economies, and also different bourses. For example, the CAC we were just showing down more than 2%. Who do you see being impacted, at least in the near term, by these elections? Is there an index, a sector, a bourse? I mean, what are you looking at as possibly seeing the most impact?
The investors I'm talking to think that French financials will receive most of the weakness, and that makes sense. I think there's going to be plenty of volatility over the next month because we have these elections in 2 rounds, and Macron is clearly trying to, call the bluff, not only of the far right, but of the French public, which is a bit prone to protest voting, and buy himself a few more years without this threat hanging over him. So let's see.